The secret financial war between America and Europe. The relationship between the United States and Europe has always appeared strong on the surface. Allies in wars, partners in trade, defenders of democracy, and builders of the modern global order. Yet beneath this alliance lies a quiet, persistent struggle that rarely makes headlines. It is not fought with weapons or soldiers, but with currencies, regulations, banks, sanctions, technology, and influence. This is the secret financial war between America and Europe, a long and complex battle over who controls money, markets, and the future of global power. After World War II, Europe lay in ruins. Its cities were destroyed, its economies shattered, and its political systems weakened. The United States emerged from the war not only victorious, but economically dominant. American factories were intact, its currency was strong, and its financial institutions were ready to lead. Through the Marshall Plan, the U.S. helped rebuild Europe, but this help came with structure and influence. The global financial system was redesigned, and at its center stood the U.S. dollar. The Bretton Woods system established the dollar as the world's reserve currency, tied to gold, while other currencies were tied to the dollar. This decision quietly shifted financial power toward Washington. Europe accepted this system because it needed stability and recovery. At that moment, the alliance was genuine, but the imbalance was clear. America held the key to global liquidity, and Europe operated within a dollar-dominated system. As decades passed, Europe rebuilt itself. The European Union was formed to prevent future wars and to strengthen economic cooperation. Eventually, Europe introduced its own currency, the euro, not just as a tool of convenience, but as a strategic challenge to the dollar's dominance. The euro represented Europe's ambition to regain financial sovereignty and global influence. For the first time since World War II, the dollar faced a serious competitor. This was the beginning of a quiet rivalry. The United States continued to benefit enormously from the dollar's status. It could borrow cheaply, run deficits without immediate punishment, and use its currency as a geopolitical weapon. Europe, despite its economic size, remained vulnerable to dollar-based systems. Most global trade, energy markets, and financial transactions still flowed through U.S.-controlled channels. The financial war intensified through regulation. After the 2008 financial crisis, both sides blamed each other in subtle ways. American regulators imposed heavy fines on European banks for violations tied to U.S. financial laws. French, German, and British banks paid billions of dollars in penalties to U.S. authorities. Europe viewed this as legal enforcement mixed with financial dominance. The United States argued that its laws applied because transactions touched the dollar system. This exposed a critical truth. Control of the currency meant control of the rules. Technology became another battlefield. American companies dominated global financial infrastructure. Payment networks, credit card systems, clearing mechanisms, and digital platforms were largely U.S.-based. European nations depended on these systems even when their political interests conflicted with Washington's. This dependence became painfully visible during sanctions. When the United States imposed sanctions on countries like Iran and Russia, Europe often disagreed politically. European companies wanted to continue trade, but they could not. Why? Because transactions required access to the dollar system and U.S.-controlled financial networks. American sanctions effectively overruled European policy choices. This moment exposed the imbalance of power clearly. Europe had political opinions, but America had financial enforcement. In response, Europe began searching for alternatives. Discussions about independent payment systems, reduced reliance on the dollar, and stronger euro-based trade increased. However, progress was slow. Financial systems require trust, scale, and time. The dollar had decades of dominance behind it. The euro, while strong, was constrained by internal divisions, different fiscal policies, and political fragmentation among member states. Meanwhile, America continued to use financial power as a strategic tool. Sanctions replaced military action in many cases. access to markets became leverage. Control of technology companies translated into influence over data, payments, and communication. The United States did not need to confront Europe directly. Its dominance was embedded in systems Europe relied upon daily. The European response was subtle but persistent. Antitrust actions against American tech companies increased. Regulatory pressure grew. Europe positioned itself as a defender of data privacy, consumer rights, and fair competition. These moves were not only about ethics, they were economic and strategic. By regulating American giants, Europe attempted to rebalance power without open confrontation. Currency markets became another silent battlefield. While the euro never fully replaced the dollar, it became a major reserve currency. Some countries diversified away from the dollar toward the euro. Energy trade discussions increasingly included euro-based contracts. These moves signaled Europe's desire to reduce vulnerability, even if complete independence remained unrealistic. The war is not one of hatred, but of interests. America seeks to preserve a system that benefits it. Europe seeks autonomy within that system. Both sides cooperate publicly while competing quietly. The conflict is structural, not emotional. It is embedded in banks, treaties, regulations, and algorithms. The rise of China added another dimension. Europe found itself caught between American dominance and Chinese opportunity. The U.S. pressured allies to align financially and technologically. Europe hesitated, balancing economic interests against strategic loyalty. This further complicated the financial relationship across the Atlantic. Today, the secret financial war continues in new forms. Digital currencies, central bank digital money, green finance, and technological standards are becoming the next battlegrounds. Whoever sets the rules will shape the future. America wants to maintain leadership. Europe wants a seat equal to its economic weight. This war matters because it affects ordinary lives. Exchange rates influence prices. Sanctions affect jobs. Regulations shape innovation. Decisions made quietly in financial institutions ripple through societies. Yet most people never see the struggle. It remains hidden behind headlines of cooperation and shared values. The alliance between America and Europe is real, but it is not equal. Power rarely is. The secret financial war is not about destroying each other, but about shaping the world in one's image. As long as money defines power and systems define money, this struggle will continue. History teaches that empires rarely announce their battles. The most important wars are often silent. The financial war between America and Europe is one of them.